Bitcoin bulls may ignore Friday's $730 million options expiry by saving their energy for $40,000. The past few months have been less than pleasant for Bitcoin bulls, but they are not alone. Persistent comments from the United States Federal Reserve hint at plans to raise interest rates in 2022 and T is causing investors to seek protection in inflation-protected bonds. The Monetary Authority signaled its intention to substantially raise the benchmark interest rate, and they will also gradually reduce the monthly purchase of debt assets. Even though some crypto investors deem Bitcoin digital scarcity as inflationary protection, that does not change its volatility. In turn, it causes the asset price to move in tandem with risk market. The above chart shows Bitcoin price in blue stacked against the smaller US-listed companies, as measured by the Russell 2000 Equity Markets Index. Unlike the SP 500 or Dow Jones Industrial Index, this benchmark excludes those tech giants. Thus, the smaller companies are usually considered riskier and are more impacted when investors fear an economic downturn. However, the negative performance did not scare investors, as the Canada-based Purpose Bitcoin ETF attracted over $38 million worth of Bitcoin this Tuesday, its third largest daily inflow to date. The fund now holds 31,032 BTC, equivalent to $1.2 billion. Regardless of investors' sentiment, Bitcoin bulls could face a $120 million loss if BTC price moves below $36,000 on Friday's options expiry. According to Friday's options expiry open interest, Bitcoin bulls placed heavy bets between $40,000 and $44,000. These levels might seem optimistic right now, but Bitcoin was trading above $42,000 2 weeks ago. At first sight, the $430 million call options dominate the $300 million put instruments, but the 1.43 call-to-put ratio does not really tell the whole story. For example, the 14% price drop over the past 2 weeks wiped out most bullish bets. A call option gives the buyer a right to buy BTC at a fixed price at 8 a.m. Universal Time Coordinated on February 4. However, if the market is trading below that price, there is no value in holding that derivative contract, so its value goes to zero. Therefore, if Bitcoin remains below $37,000 at 8 a.m. Universal Time Coordinated on February 4, only $34 million of those call options will be available at the expiry. Here are the 3 most likely scenarios for Friday's options expiry. The imbalance favoring each side represents the theoretical profit. In other words, depending on the expiry price, the active quantity of call and put contracts vary. This crude estimate considers call options used in bullish bets and put options exclusively in neutral to bearish trades. However, this oversimplification disregards more complex investment strategies. A mere 3% price pump from the current $36,900 level is enough for Bitcoin bulls to avoid a $120 million loss on the February 4 options expiry. Still, the same rationale applies to Bitcoin bears, because pinning BTC below $37,000 can easily cause them to secure a $120 million profit. Considering the short-term negative sentiment caused by tighter macroeconomic conditions, Bitcoin bulls should pace their energy for a sustainable recovery to $40,000 and higher instead of wasting efforts right now. Therefore, options markets data slightly favor the put option. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision.